Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 29th of April, 2023, and this is the weekly technical analysis for spot gold and dollar yen for the first week of May. And there's a contrast here between these two pairs, with the precious metals still struggling to break out higher or break down. Is still holding support above 1975 and not able to break out much higher above the 2007 level for the week, and it's just consolidating sideways, waiting for the key news from the Fed this week. Last Friday or yesterday, the BOJ has already gave a dovish outlook, and that triggered a weak Japanese yen, with the dollar yen pushing up higher, breaking out finally above the 135 round figure. So we'll review what happened last week with some of the key news, and a look ahead with this week's critical news that will impact these dollar-related pairs. All right. Now here's the look back at last week, and also a look ahead for next week. Last week was the key highlight was the PCE price index. But before that, the US advanced GDP did come in lower than expected. So this is could be a concern for the economy, getting weaker, and with some recession fears. So that's weaker than expected. And then at the start of Friday, the Bank of Japan, with their new governor, Ueda, taking a dovish note and not making any changes, but looking to study and assess the markets, and which may take a while. So looking very dovish, and this drove the Japanese yen lower, and the corresponding pairs higher, dollar against yen higher, pound yen also higher. So that was a major impact on the yen pairs, which we'll see in the dollar against yen analysis. And this coming week, of course, we've got 3 central banks announcing their rates, starting with the RBA, and they did not change rates the last meeting, and the expectation is there'll be also no change this coming Tuesday, but we'll see whether they have actually paused. Then on Wednesday, the key one with the FOMC expected to increase rates by 25 basis points, with all the data that has been seen. Oh yes, and of course, last week the PCE price index came in as expected, with the core PCE index for the year down to 4.6%, excluding food and energy, but it's still high versus the preferred 2% target that the Fed is looking for. So still some work to be done on the inflation front. So because of that, the Fed is expected to increase rate again, but got to watch out for the guidance for the upcoming months, whether they're going to pause after this, or whether there's going to be one more round in the next following months. The ECB is going to expected to continue to increase rates another 25 basis points. they are still lower than the Fed's rate, so they started late in their rate hike cycle, and this will impact the euro. We'll see whether it's going to break out from the range or break down. And on Friday, the non-farm payroll report with a lower expectation of 180,000 only for the jobs to be added versus the 236 for the previous month. So we'll see whether that's very conservative forecast for the jobs market. So some critical trigger-ish points for next week for the forex market. So have to be very careful to watch out for the volatility. All right, let's move back to the other majors analysis. Okay, let's begin with spot gold, with support still holding at the 1975 area. Next interim support is going to be at the 1950 and the 38 fib retracement area at just above 1957. And then a key support at the 50 fib, along with this swing low range, just slightly above that. And it has been consolidating in a slight triangle pattern here. And if we look at the weekly time frame, you can see that there's lower lows and it's inside the bar or harami pattern now from the previous week, and it's just waiting to break out. Let's see which way it's going to go, whether it's going to break out higher or just break down and retrace lower. So it's not, so far it has not been able to make much gains from last week. And so coming up to a key week with the increased volatility for the FOMC rate decisions. So have to be very careful and just wait for the news to be absorbed and the volatility to cool down. All right, so very critical support now at the 1975 and the next key one at 1950. So above that, it's got to break above the 2000 level, but it's been spiking through that couple of times, but not able to establish any ground. That was almost 2010 for last week, but still fell short. Okay, so let's compare this with the US dollar index to see whether that has also been struggling in a consolidation pattern. And here's the DXY. And last week it's still attempting to break above these previous week's high. It dipped even lower on the Wednesday. did not get to the swing low and managed to recover from there to retest this resistance zone again before pulling back to close lower below this 21 fib retracement, and still sitting above the 101 level. So it's still having a tough time and biding its time, waiting for next week's FOMC rate decision, and then also followed by the NFP on Friday. But the key one will be the Fed's rate decision. And let's also take a look on the weekly time frame. And another spinning top. And further indecision, market is just waiting for next week's rate decision. So very critical week coming up. But fib is a key resistance, well, interim resistance for now at the 102.30 area, and critical resistance area is at the 103 with the 50 fib retracement area. So for now, these are the resistance level it needs to break out from. And we'll see if this rising trend line will provide any kind of support. And it does break it very critical level round figure at the 100. That's a very key support level for the dollar. Okay. So still consolidating and just waiting for next week's rate decision to break out or break down from here. And we'll likely find probably if this support trend line does hold, it needs to bounce off from there and break through. Otherwise, if it breaks down, this is a very critical support area at the swing low. Otherwise, it's going down towards the 100 round figure. All right. Let's move back to the other major pairs. Let's move on to dollar yen. If Friday's breakout higher above the 135, and it was trending down in a bull flag before eventually breaking out higher on the Friday. And now the swing high is going to be a key resistance zone. And that's at the 130, almost 138 level. Let's add the 138 here. And that's at the trying to retest the high of the year thus far, just shy of the 138. There is bullish momentum from this weekly close from last week, with this very bullish close for last week. So it's really going to try for this 138 level. If it does break out higher, then next round figure that it's going to target for is at the 140. But otherwise, if it pulls back and retraces, then there will be support from the 135 again, and the 62 pip retracement from this swing low. That's from this support area. So let's add the interim support now at the 62 fib, and the next key support is at the 50 fib with this daily 200 sitting right on it. Okay. So watch out for next week. There's going to be very high volatility with all the central banks announcing their rate decisions. And then on Friday, there's still the non-farm payroll report. So lots of volatility, but also lots of opportunities. But do trade safe and have a good trading week. And cheers for now.